Hello. Welcome to the second part of our conversation with Courtside Ventures, Kai Bond and Deepen Parikh. In this final part, we'll be discussing diversity and inclusion as it impacts the venture capital community. We hope you enjoy it. Let's shift a little bit to talking about diversity. And so, when you think about this year of 2020, one of the things that has really come to the forefront is another look at racial injustice and the disconnect between some people's realities and others' realities. We saw that was really accelerated with the murder of George Floyd. And even surprisingly for me, as one who's worked in corporate America for 20 years, there's a nationwide introspection across all industries, which I had never seen before. Industries were looking and realizing that they weren't diverse or they haven't properly served women and people of color in a consistent manner, even from the professional ranks. And so VC was no exception. Many VCs acknowledged that they were lacking in their diversity, and they made commitments to diversify their partner roles, their portfolio companies, their operating teams, that they were going to make a more conscious effort to widen their level of who they're interacting with. So for both of y'all working at a firm that has diversity at the forefront in investments and as investors as well, is this a movement or a moment in time? Will this bring about significant change for an industry that, quite frankly, I would say has not been as representative as it should be? I'll open up the door to Kai first.
Sure. So, prior to my role at Courtside, I was investing out of Catalyst Fund, and that was a $20 million fund focused exclusively on investing in underrepresented founders. So we did 70 investments. We were doing seed, pre-seed, anywhere between $50K and $1 million in underrepresented founders. And so, this has been something that's been very core to me as a founder, walking into rooms where no one else looked like me for 10 years trying to raise money, as well as deploying capital and trying to convince, individuals who I work with that, just because this founder was not cut from the same cloth, that their ability to execute and deliver on a big vision in a market that they might not understand as well was still there, and the opportunity existed to, 10x an investment. And so, what I would say to answer your question directly is what I see thus far is a lot of intent. What we don't see is a lot of dollars flowing. What we don't see are a lot of partners being hired, right? And so there have been movements around Black VC, HBCU VC. These are, platforms and organizations that have brought awareness, that have brought introspection to a lot of people in this industry. And so, it's been going on for a while. You've seen something like Catalyst Fund at Comcast. You saw Intel announce a $150 million fund. You saw, A16Z roll out an initiative. I think Monique Woodard probably put it best when I spoke to her, and if you listen to her talk, is that, Black founders and Black GPs don't need a separate water fountain. Right? These initiatives have been outside of the core of the fund. They've been an allocation of capital separate, right? What you need is for this to be baked into the very, foundation and core of the funds that are out there today. And so I think that's really the next phase. I think when you take a look at what happened during the Me Too movement, particularly in the state of California, there was legislation written that made it a requirement to have a female board member of a publicly traded company. There was a requirement that for major, institutions in California, that they would not cut a check to your venture fund if you did not have a female partner. So, I am hopeful that this is a movement. What concerns me about this moment in time is that we're seeing a lot of intent, but we're not necessarily seeing some of the similar legislation and some of the progress that we saw with the Me Too movement to have the sustainability over multiple years, multiple cycles, and multiple generations. I think that's when you'll actually start to see some change. And so, from a Courtside perspective, we have a diverse investment team. We have African American investor, 2 Indian partners. We and our portfolio reflects who we are, right? We have 37% of our investment portfolio is in underrepresented founders. And I don't think that that's because we have been overly intentional. It's just because we have networks and we have a belief system and we have a structure in place that allows us to break down what is inherently cultural biases that people carry with them throughout their lives. And so that will not change at major funds until you have Black investing partners, until you have Latinx investing partners. And so I think that there's a lot of work to be done. I'm hopeful. I wouldn't be a venture capitalist if I wasn't an optimist, but I do think that there's still significant amount of work that needs to be done to make sure that this becomes a movement and not a moment in time.
You said a couple of things. The Monique Woodward example really resonates, right? The separate waterfall, because with that, separate water fountain, because with that, it always implies something that is less than, unfortunately, right? It's, we don't expect a lot from this group over here. So we'll carve it out and we can check the box and say we had some degree of good intent, to use your phrase. And then the fact that your firm has 37% from underrepresented minorities, I think is fascinating, because that is not the focus of your firm, right? It just happens that you have a wider lens, you have a wider purview, and you can see opportunity that don't have those biases as you built in. What are some other things that, from you all's perspective, are you getting more traction as part of this movement now? Are you getting like more deal flow? Are you getting other firms who may not be as diverse, who don't have that 37% track record, say like, hey guys, how are you doing it? Anything from that, from a VC to VC perspective, that is like boosting you all at this moment in time? I'm curious.
I would say no. Personally, VCs are in the game of generating 10x returns, right? They know what their targets are. They are, fiduciaries of capital for their LPs. And so they're looking at our portfolio and they're trying to figure out, should they try to preempt the next, athletic round, or how do they get into StockX, or, what's going on with Players Lounge, and how are they doing? And so, folks are looking at our portfolio because they find it particularly attractive and it generates really good returns and there's great companies. I do think that there have been an outreach to say, hey, we're interested in learning more about what you're doing. And again, that goes to the intent. The intent is good. The intent is there. I do think that there's actually a moment in time that people are realizing, like, I didn't understand this is how you lived your life. Like you were scared of the police. I didn't understand that you felt like every time you walked into a VC room as a founder trying to raise money, that you felt like the world was going to be against you and that you had to outperform by 20 times in order to get a small check from someone. And so I think there is a part around this that becomes a realization, right? So there's an educational component to bring people into the fold to understand. There is an action component, right? And I think we're still at very much the education component. And I'm excited for the next phase of action. But from LPs, I can tell you, I know every Black GP that's out there who has their own fund. And I can tell you right now that the people who do well and are smart are getting money from great LPs. But they're not getting money from new diversity initiatives that have been set up to funnel capital in. And so I'm interested to see, when the numbers come out from NVCA, in 2021, if there has been a change, because it's still been less than 1% of, decision makers at venture capital firms are underrepresented. It's still less than 1% of venture capital going into Black and Latinx founders. We've seen an uptick in female-backed companies. It's still dramatically lower than it should be, but there has been a sustained momentum and progress there. When 2021 comes around and we get all of the data, what will have changed? I'm not overly optimistic.
Yeah, I would agree. And my own opinion is the intent. How do you transfer the intent into the movement? I think, one of the areas that we've heard extensively is the value. You touched on it a bit. the value of LPs can do to amplify and boost minority investors. And so really, if they get behind them, really support, really drive, really broadcast, that can do a lot to transform, because it ultimately comes down to capital. Do you agree? And can you say a little bit more about that?
Yeah, I think from an LP perspective, when you are an emerging manager and you're raising, anywhere between a 20 and $100 million fund, there are a lot of institutional LPs that don't want to cut anything less than a 25 or $30 million check. It's not worth their time. And so, because they have certain clauses where they don't want to be more than 20% of a fund, and have that kind of concentration risk, that it automatically excludes you, right? And so some of the structural change needs to come down to how emerging managers and emerging funds are funded. And you're starting to see a movement around this area. You're seeing, folks like Sendana, who are out focusing exclusively on emerging manager funds. And they have different check sizes to help anchor them and help those funds grow. But you see what Beezer's doing with OpenLP, and having transparency into what are the best practices, what are the things you should expect to be ready to answer. So some of it is that this industry was for many years a black box. Right? You didn't know what you didn't know until you spent years digging through it, and then you could get some insight into the industry. So there's a transparency component. There's structural components in which, very large institutional LPs need to, change the way in which they allocate capital. And so capital allocators certainly, and we're seeing a lot of people actually, I think, understanding that being able to 3x capital in some of these smaller funds and have meaningful returns is a real opportunity, right? So you see things like Recast Capital, getting set up exclusively to focus on this emerging manager category, of which there are many underrepresented managers out in market. So, there is a transformative period that we're going through. The unfortunate reality of managing funds and, dollar sizes of this nature, that they're long cycles, right? People are talking about a fund is going to be a 10-year fund. You're talking about probably wanting to build a relationship over multiple funds. So you're talking about 30, 40, 50 years that you're going to have to kind of see change come. It's not, the same. And the reality, as I see it, is you're going to need a couple of large, very successful exits from African-American, Latinx, female founders that then come seed these emerging LPs. These emerging LPs come in and they're funding emerging managers. And so this kind of economic transformation, and what you see in the macroeconomic conditions in private markets, and how this amount of wealth redistribution takes, is generational, right? And we're just seeing the beginning of this with the 645s of the world, the Equal Ventures, the Mac Capitals, these are funds that Plexo, it could go on and on, right? Charles and Kanye, the reality is this is the first generation, and it's going to take this group 20 to 30 years to prove out that they can generate returns the same way normal venture capitalists can, for then larger emerging managers and LPs to be able to free up capital and dump it in. So it's a long cycle. This is not for the faint of heart. If you're an entrepreneur, the likelihood of getting rich and being highly successful is incredibly low. You do it because you're dedicated to being an entrepreneur. If you're a fund manager, it's no different. You're doing this for years and years. This is a long game. And so it's going to take a long time for this change to come. And I don't think that there's a silver bullet. I think, unfortunately, everybody's like, oh, cool, there was an announcement for this hundreds of millions or this tens of millions of dollars. And that's great. But seeing that return, seeing that grow, seeing that redistributed is going to take some time.
Yep. It is interesting. I think having people step back and recognize that this is going to take time. And if this is the first generation, if you will, and the modern model of venture capital was originated right in the late 50s, 60s, and that's been 50 to 60 years. To have any meaningful change, we do have to have that patience. I just think that unless you have that long-term lens and understand how to change that intent and education, as you talked about, into transformative, consistent improvement over the next 50 years, there won't be any change. And then that will depress people. And they'll quickly look and say, oh, we've been doing this for 2 years. It doesn't work. We'll kill it and move on. So
Yep.
I'm excited and hopeful at the changes that are occurring. And there's so many great people pushing forward. But it's going to take a lot of work. Deepen, I wanted to capture any thoughts here from your lens or your perspective on anything we talked about in terms of your firm and its record on diversity, the way you approach your lens and you approach investments, and even your particular thoughts on like how the dynamics of the industry are changing given everything that's happened over the last couple of months.
Yeah, I think, Kai is obviously incredibly well versed in this through his experience prior to Courtside. And so we certainly have taken his lead and his guidance on a lot of how we think and frame our views at Courtside as a fund. But, what really struck us early on in developing Courtside Ventures was the fact that if you look at sports as a whole, you look at a sport like basketball, which is from a player side predominantly Black, but a lot of the capital and a lot of the investment there is not necessarily going towards Black founders. And so, kind of being able to turn that on its head a little bit and say, where are the folks how do we get capital to the people who, whether it's a former athlete per se, or maybe it's someone who was a phenomenal player in college, or just has really deep ties to the sport, who knows it so intimately well and wants to build something in the world of sports. How can we help them think about how, building a large company? How can we think about potentially providing them capital? For us, it's not necessarily always about providing capital up front. We love building relationships with founders really, really early on if they're building within one of our three verticals. And so we've formed pretty good relationships with a number of current athletes, former athletes, a lot of folks who aren't necessarily a big name, but who have developed a really strong understanding of, what to do in their post-career days. I mean, these are all things that I think the leagues try to press upon. But it really comes down to who can, from our standpoint, how can we help and how can we kind of share a lot of our knowledge and understanding in helping them kind of transition over to the next step. And also, how can we ensure that they're valuable to the companies that they're also getting involved in.
I think that's wonderful. I think a good example is like Andre Iguodala and Steph Curry, who really, the time with the Warriors, really have like merged their interests, thinking beyond their career, investing in technology companies that that and getting that exposure. And I remember reading about Andre Iguodala, how he was really trying to bring other players who were younger, might even had bigger contracts, and expose them to that. And that is another angle of attacking that diversity problem too, right? If you can have high net worth individuals with a high level of business acumen come into a room, get attention, help drive and support a company, they're just going to pull a bunch of other people behind them, particularly in the athletic space. It's a great point.
Yeah, I think it's also a function of, there's this whole new phenomenon that's being created in sports where college athletes will be able to get paid from endorsements. And it's still in its very, very early days. But I think that opens up an opportunity where there's going to be a tremendous amount of really, really interesting innovation and creation that comes out at a much younger age. But also the fact that a lot of these athletes are going to have money much younger. And so it's a slippery slope where if you look at the amount of capital that the average career span of a lot of athletes, it's incredibly short. The amount of savings is incredibly small. So if there's an opportunity for us to be helpful where, as a sports, fitness, gaming type fund in all three areas, which are very, very strong interest and near and dear to the hearts of many athletes, if we can help build some infrastructure around that and just be a sounding board or a lending hand, we'd love to. So we try to do that informally, but I think we would love to figure out a more formalized way over time to really be involved further around that.
That's great. Hey, this has been a fantastic conversation. Let's go to a fun ending. Let's do the lightning round. Top of mind. Best book ever read, Deepen.
Ever read? I'll say the best book I've read in the last year is Ride of a Lifetime by Bob Iger. That was his autobiography. I thought it was awesome.
Great. I haven't read that one yet. I will. Best investment ever, Kai.
That's like asking somebody who's their favorite child. Come on, man.
It can even be personal.
Stuff like that.
That's a tough one to ask. So I'll go with Winzo because it's my most recent one, and I'm incredibly excited about it.
Awesome. Deepen, favorite binge show.
Oh man, I've gone through some pretty dark phases through COVID. I'm gonna say, jeez, what's something I've rewatched like 1,000 times? This is like a sad thing, but Law and Order SVU I've seen too many damn times. I've seen probably every episode.
That's great. For both of you all, one quick best work from home tip. Something that has improved your life in a world of staying at home, sheltering in place. Start with Kai.
Daily workout. There's no wasting time on the subway. There's no back and forth. There's no figuring out what to order. Like, you can always get in a 20-minute workout. There's no excuse anymore.
It's true. Deepen.
Having childcare help.
That's a great one. It's very true.
Facts.
And then my favorite one, which is if you could eat only one meal for the rest of your life, what is it? Deepen.
Mexican food. Probably a burrito.
Kai.
I love to cook, and I cook a ton. I think probably it would be my duck bolognese.
Definitely got to you got to ship a bowl of that out here to the West Coast.
Next time you want to come distance dinner in my backyard, you're welcome.
That's right. Let's do some social distance dinnering. Guys, this has been fantastic. We covered a lot. We talked about overall industry trends that you've been seeing in the marketplace. We talked about how you're kind of looking at investing and portfolio management. We talked about capital raising. And then we talked about like diversity and what's going on now as it applies to VC. I learned a lot from this conversation. I hope our audience did. Really appreciate your time, Kai. Really appreciate your time, Deepen. Thank you very much. And the best of luck as you make it through the rest of 2020.
Thank you. Appreciate you having us.